I hate when YouTubers are purposely ambiguous for the purpose of driving up watch time, so I'm not going to do that. I'll answer a couple things immediately. My trading expertise is in single stocks. I do not play the cryptocurrency game. I'm not into finding the next big thing. I'm not the friend in the group chat that goes, hey guys, I know you've probably never heard of Uber before, but you should invest now before it blows up. I don't do that. I don't know many fancy people. I don't have people in the know that I get to ask questions. I have a 2-year college degree. That's as far as I plan to go with my education. I never stepped foot in a financial or an investing collegiate class. I never got to that point, so I have no legitimate training. But I think I've developed a concept now that I'm willing to share with you guys, and I think I've come to a point of some sort of mastery with it. It has worked for me the past several years. It continues to work for me today. Before I get into the specifics and the tips that I have for you, I'm going to spend a couple minutes talking about what exactly it is I've accomplished using the Robinhood app and where I am today. I first heard of the Robinhood app in late 2017. In January of 2018, I finally opened my own account, started messing around with some stocks. The first stock I think I ever bought on Robinhood was Starbucks stock, which is funny because they would fit the exact strategy I'm sharing with you guys today. Around that same time, I was attending the College of Charleston. I did 1 year of university, and as a freshman, I was made aware of a program that you could do as a senior. Students in this group get to, for 1 semester, invest $10,000 of alumni capital, and for a short period of time, that became my goal. Because I didn't have many connections, I said, that is my opportunity to prove myself. I need to get there. As I just said, I ended up leaving university after that first year because I decided it's not worth putting another 2.5 years in to get there. It's not worth $40,000 or $50,000 of student loan debt to get there. But I remember I told myself very strongly at that time, I'm leaving university, I'm not leaving opportunity. So I decided to try and do something that at the time I wasn't even sure if it was totally legit or legal, but I decided I'm not going to wait to invest other people's money. I'm going to start this thing right now. I went around to family and friends and I started pitching the concept that we could all pool our money together. This was at a time before Robinhood had fractional shares. Amazon, for example, was like a $2,000 stock. So I went around to people and I said, individually, some of us can't buy a share of Amazon, but together we can. Then as a group, we can share the profits that the wealthy shareholders get, and then we just split our profits proportionally. Very quickly, I ended up building a group of more than 20 individuals. I was investing more than $50,000 total dollars. Much sooner than if I'd waited for my senior year of university, I was able to invest other people's money to prove myself in the stock market. This investment group ended up lasting somewhere around 2 years. I can't remember exactly. I ended the group myself. Not one person over those 2 years withdrew any money from the group because we were consistently beating the market. I also think I was doing a good job of keeping people informed and involved in the process. At the end of every month, I would send out an updated, kind of a 2 or 3 page document about how we're doing, what my thought process was, what the plan was. I was really proud of what I was accomplishing. I was making people money. I wasn't paying myself a penny of their money. I was doing it totally for free. That's the reason what I did stayed legal, but I was still getting concerned that at a certain point we were going to get too large for me to be able to handle the tax implications at the end of the year. I didn't want to get stuck in a position where somebody would potentially pull their money out early and then I'd be stuck paying their capital gains out of my own pocket. Some of the people in that group I'm still assisting on a daily basis. They've taken their money back and opened their own personal Robinhood accounts, and I'll give them advice about how to operate their account on their own. My Robinhood account is back up above $50,000 again. This time though, it's all my wife and I's money, every penny of it. Looking inside my Robinhood account, you see I've profited over $22,000 all time since the start of 2018. You see this flatline dead period for about the last 1.5 years in this account. That's because that's when we bought this house and we took basically every dollar we had to make the down payment on this house. So we've spent all this time building ourselves back up to now where 1 month ago we started investing in single stocks again. Obviously, of this $22,000 profit in my account, it hasn't all gone to me, profits were split amongst all the people in that investment group for quite a while. The other thing I think is noticeable reviewing this part of my Robinhood account is that we survived the COVID-19 turbulence. At no point during all that stock market craziness did my account dip below what we had already profited. The investment strategy I'm sharing with you today weathered that storm, and even as the stock market again at this point during the last several months has taken a bit of a hit, today my account is again at the highest point that it's ever been. So let's get into somewhat of the lesson portion of this video where I kind of teach you what I do. You'll be surprised, I think, at the simplicity of it. You can't beat the market consistently without some sort of risk attached to the style in which you're investing. Like I've said before, I don't do cryptos or penny stocks are the same thing. I don't do penny stocks. I don't look for the next big thing. But there is one function on Robinhood that I utilize to increase my risk, which increases my reward factor. Let me start with what keeps the strategy safe and secure. We're investing in only brand name corporations that everyone has heard universally. That's why I said Starbucks would work earlier, okay? Walmart, Amazon, Apple, United Airlines, McDonald's, Google. There's enough of them out there that you've got quite a list. But they've got to be a mega brand that you just know isn't going anywhere. The key here is to have several companies that things might go wrong temporarily, but at the end of the day, they're still a staple of our culture and of our lifestyle. They will bounce back. Once you've done this, you'll find you have a list of somewhere about 15 to 30 companies. You know, we all have stuff going on beyond the stock market, social lives, a job, but a list of 15 to 30 companies, just reviewing it at the end of each trading day takes about 5 minutes to see kind of what their stock price was at the start of the day and now their new stock price currently. The other reason choosing these companies with major brand recognition works is because most of them have long track records, and you know what you want to see in the stock market is kind of a wave of up and downs that slowly over time is still constantly going up. We like that the stocks are steady increasing, but we're also not hanging on to these stocks for long enough for that to matter. What matters more is the wave element of it. So let's just call it a list of 20 when we get started, all right? You want to look at each of these pretty thoroughly when you're first getting started and write down a baseline, what is this stock worth? Not what is this stock worth today? What is this stock worth? So look at the last couple months. That wave you see, if you were to draw a straight line through the wave, where is that straight line? That's your value, what the stock's really worth. There are days when the entire market has taken off, everything's at a peak value, and there are days when it's the opposite and everything's plummeted and everything's a good purchase. Generally, having a list of 20 means that you're gonna have some that are having good days on the same day that others are having bad days. This is a good thing for our strategy. Once you've established what that straight line value is of each stock, you want to first start by buying one that's lower currently than that straight line value. In a healthy stock market that's kind of moving back and forth, up and down, not one way or the other completely, it's not going to take too long for that stock that you bought lower than its straight line value to return to that straight line value. And obviously if it's a wave, it's going to go from lower to higher to lower to higher. I don't even want you to wait from when it goes from lower to higher. I want you to buy it lower and sell at that straight line value, because then you're taking a profit, and on that same day that you're selling at that company's straight line value, another one of the other 19 is going to be lower than its straight line value. There's not as much of a guarantee that a stock goes from its straight line value higher than there is that another stock returns to its straight line value. There is one group of humans on planet Earth that will shove diversity down your throat more than a Democrat, and that's finance people in the investment game. They want you to diversify in as many ways as possible. Hey, put $5 here, $5 here, $5 here. Super safe. I'm not telling you to do that today. That's one of the risky parts about my concept. But if you're doing it in the exact way that I'm describing to you, it's really not that risky. If you're investing with less than $50,000, I don't want you to be buying more than one or two stocks at a time. Because you're buying that stock lower than its straight line value, you don't need many of them at one time. Using the same strategy and diversifying in a million ways is going to take all kinds of your time, because you're going to have to watch even more stocks on a day-to-day basis, and your profits are going to be smaller when they happen because you'll have been investing a smaller amount of money. You want your profits to be relatively significant when it's time to sell. We haven't yet gotten to why it is I beat the market. Robinhood on the surface as a app and platform is free, but they do have a service called Robinhood Gold that you can pay for on a monthly basis. This is something that I do utilize. Part of what Robinhood Gold can offer you is the ability to trade on margin. This is trading with money that isn't yours. You are temporarily borrowing money from Robinhood so that you can invest even more money. You will have an agreed to interest rate that Robinhood is charging you for the use of their money, and your job at that point is to use that money to generate a higher return than you owe Robinhood. Now, things may change, but today, the interest rate Robinhood charges me is not so high that I can't beat it myself using the same money. So the idea is you eventually return Robinhood's money to them with their expected interest, but you've earned more in interest yourself. You've ended up profiting on the transaction. You're able to borrow up to exactly as much as you have. So if I have $50,000 in my account, I can borrow on Robinhood Gold an additional $50,000. So now with $100,000 to use, I would be doubling my result of whatever I've invested in, whether that be a loss or a profit. It would double the result on the $50,000. I found it to be super helpful over the 5 years I've been investing on Robinhood. Let's say the market for 1 week goes up 2.5%, but my account went up 2%. If I'd been using Robinhood Gold, I would have doubled my result. That means I would have made 4% while the market still only made 2.5%. That's how we've beaten the market. I love this strategy. This is what I'll continue to do. I won't diversify in the stock market until this account is in the six figures. At that point, I think you should return to a little bit more sanity and just make yourself a little more safe. But with smaller nest eggs, this is easily the best concept I've ever come up with on my own. So that's what I think is funny about it, because a lot of people that I know that I do really well, and they think I don't know what he's got going on. Maybe it's super sophisticated, and it really is not. If you've got any questions about this, leave them in the comments. I'll answer every single one of them. I appreciate you guys watching. I will see you guys next time on Welte.